Standing in a modern apartment at sunset, you start wondering whether stability means ownership or simply predictable monthly housing costs. Scrolling rental listings late at night, you realize housing decisions today happen through apps, algorithms, and surprisingly emotional financial choices. Returning keys or signing mortgages shows the same reality. Housing always costs money, but ownership changes responsibility, risk exposure, and flexibility. Mortgage payments quietly split into principal, interest, taxes, and insurance, meaning not every dollar actually builds ownership the way people assume. Those monthly payment dates repeat relentlessly, reminding you housing isn't a one-time purchase, but an ongoing financial commitment requiring discipline. Packing boxes quickly shows renting's biggest advantage: mobility, letting you adapt faster when jobs, cities, or personal priorities inevitably change. A sold house sign signals long-term commitment, because property ownership usually works best when you stay put for several years. Roof repairs highlight homeowner responsibility, since maintenance costs eventually appear, sometimes predictable, sometimes sudden, and rarely included in optimistic mortgage calculations. Flooded bathrooms demonstrate another ownership reality. Unexpected repairs happen, and homeowners must solve them financially, quickly, and independently. Meanwhile, renters relaxing while repairs happen elsewhere illustrates convenience. Housing becomes a service rather than a constant logistical responsibility. A house model beside investment options represents opportunity cost, meaning money tied into property can't simultaneously grow through alternative investments. Comparing investment charts with house blueprints shows wealth building has multiple paths, each involving trade-offs between liquidity, growth potential, and stability. Rows of suburban homes reflect appreciation trends, where property values often rise over long periods, though never predictably every year. Market graphs rising and falling remind you housing behaves like other assets, influenced by economics, interest rates, supply constraints, and demand cycles. Signing mortgage paperwork formalizes commitment, turning housing into a structured financial obligation that usually spans decades rather than temporary phases. Painting your own walls captures ownership freedom, allowing customization, permanence, and emotional security many renters eventually begin valuing strongly. Empty apartments emphasize impermanence, showing renting prioritizes flexibility, exploration, and adaptability rather than long-term geographic anchoring. A bank vault door symbolizes leverage, where borrowed money lets buyers control larger assets, amplifying both potential gains and financial downside. Repair estimates on kitchen tables highlight ownership unpredictability, because maintenance budgets rarely stay stable over extended property ownership. Moving trucks outside apartments show mobility advantages again, reinforcing how renters can pivot faster when opportunities or circumstances shift. Studying amortization charts explain loan math. Early mortgage payments mostly cover interest, with equity accumulation increasing gradually over time. Families dining comfortably inside owned homes reflect stability benefits, where long-term residents can create psychological security and consistent environments. Renting while working remotely from cafes shows flexibility, enabling lifestyle experimentation without being financially locked into one specific location. Hardware store aisles illustrate ongoing maintenance reality, where homeowners continuously invest time, effort, and money preserving property condition. A piggy bank beside house keys symbolizes forced savings, since mortgage payments gradually convert housing expenses into partial ownership. Property tours with agents highlight acquisition complexity, reminding buyers purchases involve negotiations, inspections, financing approvals, and emotional patience. Late-night bill reviews capture financial pressure risk, especially when large fixed housing costs leave limited room for savings or emergencies. Browsing rental listings on the floor reinforces accessibility, showing renting often requires less upfront capital than traditional home purchases. Stormy suburban houses illustrate market risk exposure, because property values fluctuate with economic conditions beyond any homeowner's control. Standing between apartment and house options represents the real decision. Balance flexibility, stability, finances, and lifestyle before choosing your housing path.